But when I look at other sectors, when I look at large cap financials, I mean, if we have a steepening yield curve, let's say the short end pauses and the long end continues to rise, which is kind of what we saw, I guess, over the last couple of months. In that environment, I think financials do well. Large cap financials, I mean, let's think about what this administration means. Deregulation is probably on the top of the list, and I think that's one of the positives for financials. And then when you think about just AI, generative AI, and what it can do for cost control in some of these more, kind of professional services industries, I think that is profound for margins. So I don't think the bull cases have gone away. For some sectors, like sectors that are geared to short rates coming down, like maybe more in consumer discretionary, that might be a risk. But again, when you look at the consumer, we're ably employed. Real wage growth is positive. We've got an administration in place that's probably going to lower the cost of energy, which helps that lower income consumer, which is the one area that's really starting to fray. I think it's going to be okay. I mean, I think that's the tail risk that nobody's talking about, is that it's actually going to be okay.
You mentioned employment. Can I jump in?
Yes, please.
I remember a note that you put out a few years ago about the labour intensity of the S&P 500. I'm sure you remember the note as well.
I do.
There are some questions about the supply side of the labour market under the incoming administration.